That's a good question. So the first thing I'll say is one of the tricky things about business plans is that every single business plan theoretically makes sense. Otherwise, someone wouldn't be pitching it to you. The problem is that you have to kind of sit back and take your opinion about where we are in the cycle and the economic market, both the real estate cycle and the economic cycle, and say, does this business plan make sense at this timing? Because a lot of the times a business plan makes sense, but not at this timing. And I'm going to give you one of the most interesting things that no one talks about to consider, which is um, people don't realize that LPs are pitched um, the worst like a business plan at the worst timing normally in the cycle.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Kristen and I'm here with Jeremy Roll. He's an investor in more than 60 LLCs across more than $1 billion worth of real estate and business assets. We're going to talk about, everything he sees from the investment world. He does a lot of passive investing. So I'm excited to get into it. Thanks for being here, Jeremy.
Well, thanks for having me. Thanks for everyone who's joining us too. I hope it's helpful for everyone who's listening.
Yes. I think you have a very interesting angle with everything. Tell us a little bit about your background and how you got involved in investing.
Yeah, sure. So probably very relatable to a lot of people. I spent over 10 years in the corporate world, mostly in the US. I'm actually from Canada, from Montreal originally. I have an MBA from the Wharton School or UPenn. And my last two jobs were like at big Fortune 500 companies. The last one was Toyota headquarters in LA, and then it was Disney headquarters before that. And so my journey into real estate and really on the passive side started in 2002 for everyone who's old enough, after the dot-com crash. And when I saw that happen, I kind of realized the stock market was not the right place for me for my long-term retirement predictability. Just watching the stock market go up and down 30% in a year, and like the lack of predictability and volatility was not the right fit for me. So I looked at different ways to invest, came across the concept of more predictable cash flow in syndications, and I started dabbling in those. I think it was like February of 2002. And I rotated all my money from stocks and bonds into cash flow between '02 and '07 on the passive side. And then I left the corporate world in mid '07 from the cash flow. And to be fair, like we can get into this more if you want, but I wasn't planning on leaving the corporate world. I was just planning on getting more predictability in my retirement account, but I had kind of a last straw moment with my manager in the corporate world. So it wasn't like this amazing plan that I pulled off or whatever. But I took the risk because I had the cash flow to live off of. And it's been a really great journey since.
Yeah. And I think a lot of people might see real estate as a little bit up and down, but you found kind of comfort in this, cyclical nature of it.
Yeah, well, it's really more cash flow. So you can argue that, and keep it really simple, but let's just say that you own a single family home in a pretty stable market in the Midwest, okay? And you're getting $600 a month, or let's make it easy, $1,000 a month in rent somewhere, and you're profiting $200 a month in cash flow. If we have a cyclicality and the property goes down, assuming rents hold reasonably well because you're a more stable market, you're still going to end up with pretty good cash flow if you went into the right location with the right property, et cetera, right? So the underlying value of the asset can go up and down, but the cash flow it can be more predictable depending on what you're looking at. And then of course you can always get into assets that are more counter
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Cyclical or stuff like that, that's a little more complicated.
Yeah, absolutely. And I'm sure you've seen a lot of ups and downs. So you've really seen that be tested.
Yes, yes. Yes. In fact, quick story. In January of 2008, I invested in a 300 unit student housing apartment complex in Michigan. And I actually thought we were going to have a recession in 2008. And the reason why I still did that in January, despite that, is because I kind of figured, okay, students go back to school, like more people are going to go back to school during a recession, and that's going to have no issue holding its vacancy and rent. And also, it was like right across the street from a state university campus, literally. So it was thesis worked out perfectly, zero issue, as if there was no recession, right? So there are certain ways to invest, even when you're coming up to what you think will be a challenge where it still can make sense.
Yeah. Yeah. And I would love for you to kind of talk about what you're seeing now in the market.
Yeah, so it's interesting. So on the economic side, which I think is really important to think about, I think from a probability perspective, we have such high stock market valuations, and we have an inverted yield curve in the bond market then or treasury market that then uninverted again, and that is a signal that we have a high probability of a recession coming up. And also keep in mind, if you could believe this, in 2020 we are already at a record long economic upcycle. Now we're recording to the end of 2025. So we are way overdue for a proper recession. And if we get one, then that will have major impacts on, the income and vacancy and everything else of real estate across most or if not all asset classes. And I think it's the last domino we've been waiting for a full end of cycle reset, which will eventually then breed more opportunity, which is great.
Right. And talk more about kind of the opportunity that it breeds.
Yeah. So, look, people would argue that, if you look at apartment prices, for example, that they've come down 20 or 30% or more, depending on the market, et cetera, and that they're done and they've had their full reset. I would argue no, because we haven't had a recession yet. If we have a recession, then you have rents come down, vacancies go up. People tend to either go back and live at home with their family, or they double up, to have like less expensive rents, et cetera. So vacancies go up. So inevitably, you will likely have, or probability wise, have lower net operating income. But at the same time, right now in our inflationary environment, you will probably have increased expenses. That means lower net operating income or profit at the property, right? And even at the same multiple, if you buy that building, let's say there was a recession starting tomorrow, you buy it in a year from now, you're buying it at a lower price because you're paying a multiple on lower income, right? So those are the types of opportunities I'm referring to. But then if you kind of add on the fact that during a recession, we typically would have a stock market crash, investors get scared, banks get scared and have to reduce liquidity. So now you have equity going away, you have debt going away, and then it's harder to buy property. So then you have less demand, and you actually have people who are able to negotiate a lower multiple or a better deal or higher cash flow on the exact same property on top of the profits going down. So you have the compounded effect of lower profits plus lower multiple. So better deal in terms of cash flow. And now you're in a better position from a starting gate, as a, let's say, cash flow investor like me.
Yeah. So, you've been able to kind of predict the market pretty well. Going into this time that, you think might be a recession, how can people prepare for that with their investments? I know you leaned into the university housing. That seems like a great option.
Yeah, and that could potentially be a good option for someone right now, as long as you're getting it at the right price in the right market and the right location at the right school. Because student housing has become much more complicated because a lot of schools have closed. Prices are so high. So if you're going to look at that space, you want to make sure you're in the right student population with the right longevity, et cetera. So there's a lot to consider. But the number one way to prepare really is to do two things. One is to Well, you got to formulate your own opinion, but if you end up with a similar opinion to me,
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
then you want to be very cognizant of the fact that if you're looking at something today, but there isn't a recession yet, you have the risk of a recession coming up that could be very high. And so you want to be very, very selective if do nothing for now, kind of like Warren Buffett at the moment. And number two is you want to try to get some dry powder ready, right? And there's certain ways to do that. You can either just accumulate some cash flow and kind of instead of reinvesting it, or you can even sell assets. Now, I know that's a bit extreme, and that really is case dependent for everybody. But you can consider doing all those things. I would say the most important thing is for everyone to formulate their own opinion and come to their own opinion, but really pay a lot of attention to it because it can really impact investments you're making today and next year, the year after.
Definitely. And I mean, I know that's a big strength of yours. You're very analytical with these deals. How do you kind of break them down and, rely on the data rather than the marketing materials?
Yeah, so that's a good question. So, some of it has to do with my personality. I'm just very data driven. So for me, it's just a very objective decision, and it's not emotional, which I think is really important. It's also not my decision is not at all driven by, oh, I have so much cash, I have to put it to work. I don't have that mentality, and I think that could be good for some people, but I think it could be dangerous as well in certain circumstances. Um, but I think that let me give you a really easy example. Um, if you said to me, what is the number one indicator that things are overpriced at the moment and you know that you shouldn't be investing at the moment? I would tell you that we don't have enough positive leverage. And historically, let's say on a class B asset and kind of an A minus or B plus market, you'd expect to have 125, 150 basis points of positive leverage. Right now, we probably have between negative 25 or 50 to like positive 25, right? So what that tells me is that as an investor, the price is too high and I'm not being compensated for the level of risk. There's no risk premium that makes sense. So um, as a result, I'm watching that very carefully, and that could correct itself by either lower prices, lower cost of debt, or both, right? Which I think will happen in a cycle reset, for example. So that's just one way where you can just one quick example where like, okay, if I'm not getting compensated for the right amount of return for the level of risk, I'm just going to keep waiting, which is exactly what, and I keep going back to Warren Buffett because he's also very patient. And I think he has the same type of philosophy, but just not necessarily on the real estate side, on the business side, but it's very similar.
Yeah, I think that patience is really important. I think a lot of people, as you said, feel like they need to, spend the money they have or they need to get into the market or they're going to miss out. Can you talk a little bit more about kind of how you've been able to build that patience?
I got to be honest, part of it is just personality.
Yeah.
I'm very persistent and very patient. It just kind of built into me. I am very frustrated, to be clear, that I have some money sitting in treasuries at like, just under 4%. That's extremely frustrating to me because I don't feel like I'm keeping up. But I also feel like long term, that's a smart thing to do. Um, so, yeah, that's hard for me to kind of pass along to other people. But I tell you what, the thing that I fear the most is like I speak to a ton of investors, new investors, who are trying to understand the space. I want to call with one today, and they're brand new, and they'll come to me and say, "Look, I just sold my business. I have $10 million or 5 million, whatever the number is, right? And I need to put it to work. I need cash flow." And the first thing I say to them is, "Well, have you thought about where we are in the economic cycle and if this is the right time to actually deploy the cash flow?" Because in their mind, they're like, "I gotta deploy this cash flow," and I'm like, "Well, just because it's the right time for you, it doesn't mean it's the right time for the market." Right? So, that's what you really have to keep in mind. And hopefully you could kind of keep that in mind to help with patience because you do not want to deploy capital at the wrong time. I don't need to tell you, you don't want to invest in stuff in 2007, right? Like from a cycle timing perspective. So you got to keep that in mind.
Yeah, absolutely. I mean, I think that's really good advice and definitely pay attention to the market and talk to people who are also, keeping an eye out. With all of these investments, what does your deal flow look like? How do you kind of source deals?
Yeah, I mean, I have a bit of a unique advantage just because I've been doing this for 23 years, and I also been doing it full time since 2007. So what is that? It's almost 18 years. So I've built up a large network over time. And so it's an unfair advantage to someone who is new.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
But I also did a lot of proactive things. So, for example, I co-founded public investor meetings in LA in 2007, right after I got out of the corporate world and I had more time. That actually ended up growing to the largest series of public non-institutional real estate meetings in California. We have tens and tens and tens of thousands of members. In fact, we had like 30,000 members in 2018. I don't even know what the new number is at this point. And that really helped with my network. And that was proactive. It was a lot of work, but it really paid off. I tend to, network and try to go to conferences, for example. I realize not everybody could do that. It's expensive and people are working. But if you could get to one or two in a year, if it's possible, that would be very helpful. Trust me, if you go to the bigger conferences. I started my own investor group, and that led to a lot of networking as well. And so I've taken, and by the way, I even co-founded a conference that we ran for a few years. So between all of that, you end up exposed to a lot of networking just by default.
Uh-huh.
And the networking is probably one of the hardest parts about this because a lot of the deals are not allowed to be publicly marketed. And so it's a little tricky to find deals. So if you have no interest in doing any of the networking, there are other alternatives actually. Like you can go onto a crowdfunding website to look at opportunities. You could join an investor group who has a lot of deal flow, who will be sending you deals that they're filtering. But there's definitely pros and cons to that as well.
Hmm. No, that's amazing. Yeah, your network is definitely the most important thing in this line of work, I'm sure. Do you ever see yourself like running a fund, anything like that?
No, people have asked me that for years and years and years. I just really like being an LP. So I would have made a lot more money running a fund, honestly, like a lot more money at this point, but I just don't want to change the way my life is. So I've just passed on that for that reason. And going back to networking, by the way, I tell people that passive investing is a team sport, and I truly believe that. And it's very, very important aspects of this, just to throw that in as well.
Absolutely. And what does your day-to-day look like as a full-time LP?
Yeah, my day is a combination of, if possible, looking at opportunities if they're actually out there at that time, and evaluating them. I am constantly networking and trading notes with other LP investors. I am networking with other investor groups and trading notes, and I'm also talking to general partners. And one of the great things about talking to general partners, especially the ones you've kind of built a relationship with that you really trust, is getting their pulse of the market. So for example, I've invested many times with a specific multifamily sponsor in LA who doesn't invest in LA, but they're based in LA. And I get with them at least twice a year, the founder, just to hear his opinion about what's going on in the market because they're going to know better. I mean, he's got 7 billion of apartments. They're going to know better than anybody.
Right.
I'm friends with the largest multifamily broker or a partner at the largest multifamily broker in Texas, and I will touch base with them several times a year, right? So even though you would think, oh, just network with some LPs, no, it's actually good to network with the right industry people as well.
Nice. And as you see these deals come in and you being so analytical and good with, sourcing financially sound deals, I'm sure you see stuff all the time. What are some maybe like vanity metrics or things that look really good on paper, but can be a little like not really beneficial?
That's a good question. So the first thing I'll say is one of the tricky things about business plans is that every single business plan theoretically makes sense. Otherwise, someone wouldn't be pitching it to you. The problem is that you have to kind of sit back and take your opinion about where we are in the cycle and the economic market, both the real estate cycle and the economic cycle, and say, does this business plan make sense at this timing? Because a lot of the times a business plan makes sense, but not at this timing. And I'm going to give you one of the most interesting things that no one talks about to consider, which is um, people don't realize that LPs are pitched um, the worst business, like a business plan at the worst timing normally in the cycle. So, for example, sponsors, let's say for the past few years, have to do more value add because otherwise the returns wouldn't be high enough on a stabilized deal to actually attract investors going backing into, let's say, a 15% IRR, for example, right? So they were forced to do whether it was floating rate bridge loans or high value add, right? Because they have to pay so much for the properties. And with that, doing a heavy value add deal is at the end of a cycle is the exact wrong timing. In fact, the best time to do a value add deal is the beginning of a cycle when you have the wind at your back, rents are going up, the economy is growing. That's the least risky time. Think of it as you're on an airplane and you're taking off. Do you want to, basically have a short runway before the cycle ends where you have to do all these value add things or you fall off the runway? Or do you want to have the long runway? The long runway is to provide it to you at the beginning of a cycle where you can course correct. And that is most needed when you have the most value add. And so the funny thing is that the um, the those value add deals should be presented to the beginning of the cycle, but they're actually not because it's easier for someone to buy a stabilized property and manage it. And so you're going to find that at the beginning of a cycle, and there's nothing wrong with that, doing that at the beginning of a cycle. But you know, my point being is that people are getting pitched deals that back into certain returns and IRRs that conform to the sponsors being able to raise capital, not necessarily optimized for the timing in the cycle. And that's why you really have to take a step back, formulate your own opinion, and make sure that what you're looking at makes sense at this timing. I hope that example makes sense.
Yeah, absolutely. I think that's a really great example and really good practical information for people to follow. Well, this has been awesome. I mean, I think you have such a cool space carved out in the industry, and I think a lot of people are probably interested in kind of building what you've been able to build. Tell everyone where to find you.
Yeah, sure. I mean, I don't have a website or anything, no social media. So the best way to reach out to me, everyone's welcome to reach out any way I can help. It's jroll, which is my email, jroll, JROLL, at Roll Investments, ROLL Investments with an S.com. So jroll at rollinvestments.com.
Amazing. Well, thank you so much for being here, Jeremy.
No problem. Thank you for having me on. Thanks for everyone who stuck around to the end, and I hope it was helpful for everybody.
Amazing. Well, yes, thank you everyone for listening. Hope you got a lot of good takeaways and maybe some inspiration to look at your business a little differently or add on some new things to your business. So thanks so much, and we will see you back next time. Bye.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.